Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 21st of May. Starting off with the S&P, which is sitting comfortably above the old 52.65 resistance that was made back at the turn of March, April, and although we expect probably to see a test of that old resistance as new support, at the moment we're still on track for a 54.30 target there. That's the blue September resistance line projection, looking for that over the next couple of weeks. If we do break down, then below 52.65, then we've got the 50-day moving average 51.60, although at this stage hopefully the rebound would start on the right side of 5200. Moving along to the Nasdaq, and here after the flurry that we saw for this market last week, still quite keen to push higher, and you can see that there's that rising trend channel from back in September, top of the channel there, heading towards the 19,500 area. That's the target for the end of next month, while we remain above the old resistance zone 18,500. In terms of the downside, if we do break down again, the 50-day line just below 18,000 is the preferred destination. Moving on to the stocks, and starting off with something which has got a bit of fire in its belly at the moment, bank-backed holdings rather, and here you can see that this falling trend channel, we've had quite a sharp decline from the start of the year, but the shares now basically back near the old November support area. That was around $16. The longer we stay above that, the greater the chance of a move to the top of that channel there, $22. We do need to find support, which looking at the pre-market, it may be the case that we do. Then the 50-day line near $11 could be the place, although ideally we stay on the right side of $14, which was that old April peak for the shares. On to one of the more dynamic situations of the moment, and you'll see why, because Cheetah continues to push ahead, vertical move over the last week, and hitting the target there, $12.70, above $12.70, the upper parallel of that rising trend channel from back in August, could hit or allow the shares to hit 1770 before the end of this month. Ideally, we stay on the right side of the previous day's peak there, around $10.80. Obviously, at the moment, we look as though we are a little bit below that. Moving along to another hopeful climber, and here you can see why, on this in the sense that Comtech is trying to make progress within a rising trend channel base, top of the channel there, up to $4.30. Probably want to see an end of day close through the 50-day moving average and resistance on the way down at $2.70. But a break of that area could give us a $4 plus target. Otherwise, we may have to test for support near the $2 level, which was broken neckline resistance from yesterday. The next stock is on its way, Dyne Therapeutics, and here a gap through resistance, which is normally a good thing on a charting basis. Here you can see the top of the channel there from back in September, heading for $40, looking for that by the end of this month, while we remain above the intraday support of yesterday and the top of that gap at $31 on an end of day close basis. Moving along the alphabet, and here we've got GT Biopharma, or obviously wild price action yesterday. Need to see the shares break through the main resistance zone there, $8.80, to give them a chance to hit the top of that broadening triangle from back in November. That's $11.70. Otherwise, in terms of the downside, ideally we stay above $6.40. That area was the support before the shares broke down back in February. Another mover to keep an eye on is coming up next, and in the form of Genelux, and here, or Genelux in fact, here you can see that we've got the stock in a broadening triangle base, broken out of that falling wedge there around $3.50. The longer we can stay above $3.50, the greater the chance of a break of the 50-day line, $4.60, and then a push towards $9 at the top of that triangle as soon as the end of next month. But the key here, staying on the right side of $3.50 if we can. Interestingly named company coming up next, Hims and Hers, and here we've hit the top of that rising trend channel from back in July. The level there around $18.50 and above that, which hopefully we can get back above. You can see the shares make a new peak up towards the $23.30 area, which is the upper parallel of that rising trend channel, that 1 year resistance line, the red one there, hopefully coming into play. In terms of the downside of the rug is pulled, then the top of that gap there at $16, and the area up to the previous peak there in March at $17, hopefully the support zone for this stock. We've covered Oragenics quite a few times before, and it's back again in the form of the latest push for the shares. Here you can see that we've managed to break back above the old gap there around $2.40. Above that, looking for the top of that broadening triangle base from back in January, as high as $4.60 by the end of next month. But the key here really staying above the top of that old gap and the $2.50 area. Next situation is also worth keeping an eye on, PTC Therapeutics. Here we've got basically a bear trap island reversal, one of the strongest setups that you can have, and that means that we're looking to the top of that rising trend channel from September. That's currently $44.70. We're looking for that by the end of this month, especially while there's no end of day close back below the floor of yesterday's range at 37.57. So basically above for 37.50, looking for $44 plus near term on PTC. Moving on to the last three, and the first one here, one that has been trying to recover of late, Serena Therapeutics, another biotech type of situation. Here you can see that we've got a break of that resistance line there from the end of March, the level there around $9.60, so the longer we stay above that, the greater the chance of the shares moving to the top of that rising trend channel from the end of March, currently at $13.55. The recent neckline resistance around $9.40, so we want to stay above that, whatever happens, especially on an end of day close basis. Some bullish divergence there as well, so the shares making a lower low just a week or so ago, but then the RSI heading higher. Wix is next, and here we've got a picture which is basically sort of a trending one, breaking through the highs with a massive gap, and here you can see that we've hit the top of that rising trend channel from back in September. That was around the $162 level. We're now looking for the top or the upper parallel of that channel as high as $200 by the end of next month. And once again, we would rather see the shares stay on the right side of yesterday's range, preferably $150 plus. Finishing off with a decent situation, Zenvia, and here massive move yesterday, top of that rising trend channel, heading for $4.50, which we're hoping for by the end of this month. Ideally, we stay on the right side of the old peak there. That was the peak there at the beginning of April. That was around the $3 level, so about $3. Looking for $4.50 plus on Zenvia, and ideally that happens over the next 10 days. That's it from me today. More updates tomorrow.